All right, just making sure everything's working. Give me 1 second. Oops, let me get my screen shared on the Discord channel as well. All right, hopefully that's all working. Triple check. Good, good, good. Okay. So this week we've got kind of an interesting thing going on. I'm not quite doing the money.net thing today. Doing the money. We're essentially kind of on a hiatus until some restructuring can occur with the recent resignation of a couple key members. In the meantime, I'm kind of looking to figure out how to shorten the format on this, but it's such a lot to go over. It's kind of hard to make it short, but I'll do my best. Bear with me here. Okay, so I'll just basically run down a list of what Cramer's squawking about over there at MSNBC, and then I keep track of this stuff, and I find that out of about every 10 equities listed on their watch list, I can find maybe 2 decent trade setups. So usually I can put those into our watch list and roll with them. This week, of course, has been a little bit hectic. We've got the XRP thing happening, and we got a whole bunch of different stuff going on in the world that's just kind of making the market very volatile this morning. And some of the trading this morning was very, very hard to manage for a beginner trader. I managed to make a couple decent scalps, and I'm pretty much done for the day. But for the time being, it's going to be volatile, and I think we're likely to consolidate for a while. Let me go over SPY real quick here. So SPY, we've got some known zones. We've got a big 1-for-1 setting up that could set us up to about 461 up here, but this has already been pretty gappy on the daily chart here, and we've crossed through A to Bs very regularly here. We got an A to B here that we nailed, an A to B here that we nailed. Now we're out in just up against the peak resistance here at 451. 452. If things kind of get to that 452 level today, I would almost certainly expect a pullback to this known liquidity zone here. I think we're going to probably range for a couple days into next week before we can get moving. I'm kind of expecting a repeat of what we saw down here, where we got this volatile 1-for-1, and it took forever to consolidate, and then finally made a full measured move. So be a little bit nimble today and going into a couple days of next week. I think we're going to see some volatility shake out, some cold dead hands, so to speak, and then we're going to start moving some money around. If you look at this pattern, it's very remnant of the old cup and handle. If you look at the weekly chart, it's real easy to see. Big old cup and handle. Essentially, this is a continuation pattern. We're looking pretty strong here, up to 2 rim lines. We've got this rim line here, where we can expect our handle to form on the cup and handle, and that would be targeting about a mean revision somewhere in here around 435 to 440, somewhere in that neighborhood. And then if we achieve a push randomly up or rapidly up to the upper expected breakover for a handle, we could see this thing hit 461. I mean, it's not out of the ordinary for that to happen on a cup and handle pattern like this, especially with as volatile as this bear market has been. We could certainly expect some volatility on the way back up. So far, we've had a lot of bank liquidity kind of appear out of nowhere, i.e. the Fed has been softly and quietly pushing some QE into the market, and that's kind of why we got a bit of a melt up, and then we just suddenly took off. Everything is a little bit overpriced if you look across the board for a bunch of big equities right now, and things can kind of get into let's take a profit and sit and cool this out for a little while until we see what's going to happen with the trend type of a situation going on. So certainly take most things with a grain of salt in this next coming couple weeks, and we will certainly see if we can extend up to that second rim line on the cup and handle pattern, or if we break over here and make our cup and handle formation complete here. Still not seeing a handle just yet. So this is kind of in that territory where we would expect one if you're looking at this as a basic pattern. All right, let's move on. The first thing mentioned on the old Cramer list is Disney. And my gosh, that has been in the bear channel, and we've got when I draw these bear channels, you'll always see me running your division lines within those channels. And right now we're right in the middle of regression to angular resistance here on our diamond pattern that we, of course, shorted. Almost made a full 2-for-1 measured move. Now we're sitting here looking like a double bottom, but that can very quickly turn into a bear flag and run back down to this regression line. And with a whole bunch of the politics that are in play with this particular situation in this equity, we could certainly expect some wild rides here. Um, currently the institutions have a price target right around here, about $88. I can certainly agree with that, at least in the short term. Medium term, I think we could probably see it go even lower to like $84 to $85, and then from there we may get a bounce, but that would just about complete our measured move expectation for 2-for-1 anyway, with follow through. The 1-for-1 was pretty damn volatile, whereas the 2-for-1 is a little weak. So we can consolidate a little bit here, and we might see a couple of channel days where we can maybe take some swing trades overnight. But in the meantime, I'm kind of waiting for this thing to touch 88 one more time before we make a decision on what to do with that. As far as the Cramer bunch goes, they're kind of neutral on this. They haven't really said whether they're bullish or bearish on it. It is a club favorite. They invest heavy in it, whatever. But, as far as we're concerned, we just trade a damn chart. And if they say something, we don't have to go with what they say. We watch the chart. We make our own decisions. Moving on, Microsoft with the current acquisition. That has been pretty interesting. And Microsoft has certainly gone nice and parabolic out of that. I haven't really done a whole bunch of dope on Microsoft, even though my kids hold more shares than I do currently. We're looking at steady trend up until here. We're a little bit parabolic now, and we're kind of wondering if this is going to break over and make a mean revision, come down here to about 338 or so. You got to keep in mind that when a big company acquires a smaller company, there's going to be some capital drain from principal balance of equity value in the shareholders. And that's certainly going to be reflected here. Whenever they buy something, money has to come from somewhere. In the meantime, that will be a huge revenue generator in the long run for this thing. It's definitely a wise decision. But again, look, we've got that cup and handle just like we do on SPY, and we've come out of the previous high. So this is a little bit interesting here. I would love to see this pull back and revert to a couple of these lower trend lines before moving on up, but who knows? People are just bullish as all get out with Microsoft anyway with the whole deal. But don't take that lightly. That fact that that money comes from somewhere. When you're a big company, you buy something. It's got to come from somewhere, and that's going to come from a lot of equity. Currently, we're seeing some range bars in play here on the 2-hour chart, and we certainly spiked right up to 351.43 today, and now we're playing range. So this could very easily set up for a mean revision. I would say look for a good possibility of a mean revision in the near future. And in fact, I'm going to throw a line out here, just kind of give a ballpark area where I would expect a mean revision right in here. And I'll make that a different color so it stands out. There we go. So that would be an expected mean revision. If you count the blocks here, we've got 1, 2. It has made a 2-for-1 move already. It's very likely to make a mean revision. So just kind of be nimble with Microsoft if you're getting long on that in this area. I wouldn't be buying here. That's just my opinion. I'm not a financial advisor, but the chart tells me I'm going to wait before I make any moves on this. My kids, however, are jumping up and down and waiting to buy some more. So that's the other part of the deal. One of the things I have done with growing my children's investment mentality is that anytime they purchase a video game console or a game, a game itself or anything like that, that they invest an equal amount into the company that made it. So if they bought an Xbox, what's the new one? I don't even know. The One X or whatever the heck it is, they spent the equal amount of money buying shares or fractional shares of Microsoft and so forth. They go and buy games made by Microsoft. Of course, they buy more Microsoft. So I I also tend to match them a little bit with that, so I kick them down a little bit to help them with that. But that's just kind of what I do with my kids. You can do whatever you want with your kids, but it's a great idea so far. And gosh, they've gotten in an average purchase price of like 280 to 290. They're doing great. They're very happy with this move. So this is long-term investment stuff for them, and later on, I will teach them how to sell options on those positions and make a killing. All right. Moving on down the line here, we got Penn West. That has been pretty awesome. I've had a lot of dope on this one for myself here. And currently, they bumped the price target up to 300 from 290. So the speculation of being at 300 kind of plays into just a little bit outside of our 2-for-1 measured move setup that we've noticed here. So this is where I got these boxes from, and we're accumulated right in between the two now, and we've got a weekly bar about to close a hammer here. This is actually a pretty good sign. I might say we could set this up in the swing watch list and look for a play above resistance of 255 and maybe make a move to about maybe like 295. I don't know about 300 just yet, but it's certainly a viable target. So I can agree with them raising the price target to that one. And I will make a mark on that one for a possible swing trade continuation. And looking at the situation with this thing, it's gone very beautifully with its 1-for-1 anyway, and we can certainly look left and see in the past it's followed through pretty regularly with 2-for-1s. And measured moves are great at finding short and medium term price targets, so we'll run with it. Looking at the 2-hour, we've basically come up 1-for-1 here on the shorter term. We got 1, 2, and we're coming back for revision on that, and now we're kind of setting up to maybe make that mean revision and start to accumulate into a trend. So watch it in this area. If it gets too far below 235, it can certainly pull back and make a full mean revision in the middle of this block here around 219. But if it holds this area and starts to accumulate and build a trend out of this, we could see this as a pullback, and then we get the rest of the move expected up here. So I always take a grain of salt with when the moment comes out that a institution or a group of institutions come out and call out a price target that's way out of the range, to look for a lot of the houses to start selling into that liquidity that comes in when they announce things like that. And certainly that's what we saw with this bar here. They were well advised that they were going to get a price target raise at that point, and of course sold into some liquidity to take some profit. Well, that doesn't mean they're completely offloading their positions. They're just likely to adjust them a little bit, take some profit. They got in way early on this. They got in down here and possibly even down lower here. And if there's one thing these institutions tend to have, it is plenty of patience. They will wait and wait and wait. In the meantime, a lot of them are selling options on those positions too. So just be mindful that this is likely to range to probably a big old you look at a pennant or a big old bull flag or something like that, where you see an accumulation after a trend, kind of likely to continue on. But then again, just be careful of knowing exactly where your support and resistance is, and the resistance break currently, it has to beat this control bar on a 2-hour chart. So above 250, we could see that resume. Wait, and it'll tell you exactly when to get into a swing trade. And if you want to run that with debit spreads like I would, that's where I would be. I'd be waiting for this to finish accumulating here into a continuation to go long anyway. All right, next one down the list here, TMO is kind of not necessarily my bag, but let's have a look at it anyway. Well, we've accumulated. I knew where the red line was, and we didn't break it. Can we set up a big old return on this thing? Kind of hard to say. I'm still a little bit on the fence with this particular one. Biosciences are kind of at the moment, but they've certainly been strong in the past. And we're kind of looking like we've got an accumulation for a potential 1-for-1 out of this. We might see this range up above that zone. So if we were to look at this as our range, we would basically stack it on the end of this accumulation pattern, and gives us a target up here. 720, that's a little lofty though. Currently, the institutions have raised their price target to 620, and that's a little more reasonable. Let's see if we can analyze that a little bit. Let's see here, 620. I can never get it exact. One of these days, someone will build a drawing tool that can go and take a number input, so you can just type it in and tell the line where to go. I don't know, someone probably already does. So 620 would be a little bit out of range for the near term here, but maybe in the midterm to long term time swing. But we've gone in this channel for so long that we're kind of setting up like we might break out. Look for first a short term mean revision here, probably right at the top of this bar here, around 549-ish. That might be more reasonable for the short term, medium term type of situation. And if it breaks this guy, we could certainly see this thing run higher. But that's going to kind of be the line in the sand to cross before we meet a trend on up to 619. And again, zoom out a little bit, crunch this down. Trend, a little bit of a cup and handle look to it as well. We could be seeing it climb back up that wall for sure. But in the meantime, I want to wait and see what happens with this current setup. And then in the 2-hour chart, we've got this big head and shoulders pattern here already in play. So I'm looking for a mean revision first anyway to about 519 or so. So let me stick a target down there. Oops, hopefully my audio is working. Oh, it's not working in the Discord channel. There we go. I knew I should have triple checked that. All right. So anywho, that's where I'm looking right here. It's about a 519 pullback mean revision. This is one mean head and shoulders or triple top pattern. They don't always shake out. Sometimes it'll break a right shoulder and resume. So look for above 529, 530. We could see this thing resume a bull trend. But for now, it's looking a little bit bearish for a pullback at least once. Let's move on here. At least we got the price target set. DHR is another house pick over there. They've been playing with this thing for forever. Of course, my target's up here around 241. They haven't made any price target adjustments on that in the near term, but they're still long-term bullish on this thing. Back in the day, we did set up a possibility of either a breakdown or a breakout, and it's met both. Well, this target up here met really well. Down here, it didn't quite get bearish, and we're starting to shake into a possible revision here. But let's look at the weekly. This is the line in the sand that we want to watch carefully. This is our angular resistance, and that just comes across this entire trend. The mean zone here, we're kind of in there. If we're looking at this as a descending channel play or even a wedge play, we would see it look like this. Let me get the extension line in here real quick. Usually I can just kind of draw these out in space and line them up with about where the price should be. And of course, a regression line is always warranted. And we've met it right here, so paint that one. Long-term trends, I was looking at expansion out of this channel here, and certainly we're up against that right now. And we've accumulated to the base range on that thing. I've already set that up a long time ago. And I was just looking at the mean diversion on the 2-hour chart through this mess to get the price targets here. And it's kind of neat how that lines up. Trend lines are great if you know how to use them. And effectively, if we break this resistance level, we could easily see it at least meet this pivot line here, around 247.50, or we could also see it creep up to that angular resistance. From here is where we'll start watching for long-term swing trades. Mid-term swing trades, we're kind of in the mix right now. And then short-term swing trades, we're like, we'd like to see it pull back first to support, probably around 230, 250. So let's see what happens with this break here. And anytime we have a set of lines that are divergent from each other after convergence, We know that there's a possibility of range expansion there. And again, throw down a regression line in that mix and make sure you're aware of where the halfway point is. And you could split it if you want and run fan lines in there, that's fine. But we want to know about where the range is expected, and then when it breaks one or the other, we can get a swing trade out of it. You don't necessarily have to anticipate the first move. It's much easier, especially with measured moves, to anticipate the second move and make your trade plan based on that. Just from experience, your success rate will be a little higher if you stick to that kind of plan, or that kind of plan format where you can kind of develop your own strategies. But knowing where those measured moves take shape is important, but not as important as being able to identify when it is a measured move, and it isn't yet. So we're going to wait for this to settle or break this range. And if it breaks the range, sure, we can get a quick short-term 1-for-1, and that would put us right to that pivot. So here's your leg 1. Leg 2 would be right up here. Trading that is going to be trade the break, and don't get caught up in the setup. So we just wait. Moving on to the next one, we got Pepsi with a bullish move or bullish expectation. Yes and no. I want to say we're kind of right up against the pivot area here. We are certainly in a big old rising channel. If I wanted to draw the regression line on that bad boy, we'd be right there right now, and we certainly are. Let me get that drawn anyway. So there is our regression line. Yeah, right there. This rising channel is a little iffy, and if it can't break this regression line, it will certainly pull back to a 1-for-1 bearish move through the channel and probably arrive at about 177.20 thereabout. If it continues to break above this guy, we can certainly expect at least a return to the previous high around 195.50 and maybe even a push all the way up to $200. Pretty interesting setup for Pepsi. Let's dig into the daily here. We've got Doji here, and it's very likely to at least come back and revisit the low here at 185.80. So let's wait and see what this breaks. This is kind of a wait and see setup. It's not quite a swing trade setup yet, but certainly keep that in your watch list for stuff to pay attention to, because it will eventually set up for something that is a very easy trade to predict. Looking at this setup here, a nice clean 1-for-1 right up to the top of that channel from the bottom. Easy stuff to find. This is not easy. We're going to wait for this to shake out before we decide what to do on that. And even in a 2-hour chart, we've set up kind of a rising wedge here. These tend to go for a mean revision, and again, it puts us 185.80 is about the mean of this measure. So let's wait and see what happens with this guy. We're not going to go long or short on it. We're just going to wait. If you wanted to build a long-term like leap condor, this will be a day of the lowest expected volatility, so you might get lucky. I haven't looked at the options chain on this, but you might get lucky and find some reasonable condors that you can build with leaps 6 months out or more. I don't know that they would be worthy of being cost effective as far as the spreads go, but if you look at $5 wide spreads that go up or down a whole measure from regression, you can usually make some pretty good trades on that based from neutral. So if you were looking, probably $10 on either side of price for a condor would be appropriate for setting that up. And I like to use the midterm or intraday range to build those. So I'd love to see this shake into another couple of range bars in here before we go and set that up. We might get a good chance to set that up today. But again, I'm more interested in the swing trade, and I want to see which side of the regression line is going to break to before I build something. So as to say, you could trade this from neutral, but I'm not going to. I'm going to wait for the break and just trade the break in direction. And $10 either side of the price is reasonable. And then I can just build into whatever the trend tells me to. I can go and run debit spreads, do my conversion strategies or swap strategies where I convert debit spreads into butterflies and whatnot. That has served me very well, especially with big caps like this. So moving on, and I'll probably try and add at least a look at Tesla at the end of things if I got time. But they are generally bullish on this. Delta Airlines is another one they're bullish on. Yeah, okay, it's been pretty much overbought on the daily here. We've made an incredibly parabolic move that's made a 1, 2, rare mythical 3 for 1, broke above our pivot line. We kind of know that that's very likely to pull back here, at least for a mean revision. I'd like to see it hit about 42.60 to 42.50 before I go long on this thing. Never chase it. See what happens if we break support of 46 here. We could see a mean revision swing trade on this. I would like to see one anyway. But as we're getting into the middle of summer here, it's kind of interesting. Either travel will pick up in August and early September, or it will just drop off like a stone. So the airlines are going to be kind of anticipating increase was already on the table. That's already done with. Now we're expecting at least a mean revision or a return to reality. So I'd love to see this hit about $42.50 to $43, somewhere in that range is where I would like to see a opportunity appear. So I'll go ahead and set that up with another kind of mean revision line here. Would I trade it bearish? It's pretty inexpensive to go for like biweekly swings running condors. I used to use this as a good test bed for developing option strategies for the people that I help. I like Ford a little better because it's a lot easier and a lot more reasonably inexpensive to build option strategies on, but Delta Airlines is certainly like one step up from trading options on Ford. Plenty of liquidity. The spreads are good and tight. And you can make some pretty decent moves running from neutral on these. You can trade strangles and condors pretty effectively on Delta Airlines. You just got to be ahead of the game and know when to take off the loser and ride the winner. Right now, it's kind of settling at a support level. And until it breaks it, I'm going to stay out of that until I can build a position. Maybe go into Monday and see what we get for Monday, maybe Tuesday. And ideally, we want to swing trade it rather than trade from neutral if we can, but trading from neutral is certainly an idea. Moving on here. MGM. There's one thing I don't like trading, it's casinos. I'd rather be the casino than try to bet on a casino, but here we are. Let me look at the weekly first. From the pandemic on up, sure, we've made some serious progress, right? But we're in kind of a zone where we've made our mean revision and we've come back up to the previous high, and now we're just kind of sitting here. Institutions today announced that they're giving an upgrade to this guy, and their price target is $62. Give it the old purple line so we know what we're talking about. Okay. Given that we have a parabolic move on their announcement right here in the weekly, we have a setup for a measured move that could definitely achieve $62. We have this here, and if we drag the box up from mean, it's pretty close. If you want to go and say that the rest of that trend is included, I typically don't do that, but it would certainly hit about $62. So it's not nonsense that they raised it to that, but it's a little out of means. I would be more comfortable with a $60 target initially for a long term, and in short term, I would almost certainly expect it to pretty much stop where it's at $50, just under, and then accumulate for a while before moving. So let's go look at the short term on this, get rid of this box for a moment. We've made a little bit of an overstep of a 1-for-1 here. If you look at this trend here as a measured move, I'd love to see this mean revert back here to about 44, but I'm not so sure it's going to do that. People got a little extra capital in the summertime here typically, but usually it's just if you put boots on the ground and look at family situations, a lot of people are overextended on their credit lines, and it's just really raising hell with liquidity into a lot of the market space. So I don't know that I'd be going long on casinos just yet. If you haven't already, if you've taken the advantage of getting ahead of that, cool, you did well. But from here, I'm not going to take either side of that. And I'm just going to leave it at that. I'll put the price target on there. They certainly have a pretty lofty price target on If you want to count this as your leg 1 and this is your accumulation and there's your leg 2 measured move, sure. We could say we've just about hit $50 and it's within range, but I'm gonna wait. I'm not gonna go and jump on this thing yet. I'll move it on down. LVS. It's kind of another one they're looking at, and they stuck a $70 price target on this one. Let's mark that out and then we'll get to talking. All right, so we've got a nice clean double bottom here on a daily chart. We've certainly seen bullish one-for-ones here. This is a big old diamond top, and what we know about diamond tops, they love to come up and punch right up to about the previous high or thereabouts, and that's a liquidity zone right there, by the way. You know what? I'm just going to mark that with a box instead. So there were sellers here. And this is a diamond pattern. I can finish drawing it if you really want. But all we need to know is what the output side is going to be. So we can kind of estimate that by here. And the idea is we're in the bull channel of that diamond pattern, and that's where we're at right now, being the regression line, roughly. If you want to line this up. All right, so effectively when we're at the regression line, we look for a push to the previous high, and there is definitely a supply zone right here. You can see it plain as day. Look further. There's a supply zone here, and there's a supply zone here as well. So at any point, it can turn around and run for a downward move. Diamond patterns, especially when they're a topping pattern, will love to do stuff like that. So watch for a return to angular support or a break, and we know where the targets are for short term. So this could be a decent trade setup for swings and day trades alike. So I can definitely put this on the watch list. If I could find my pen, I'll mark it. There we go. That's a daily chart. Let's look at the 2-hour chart. So we're looking at pretty damn parabolic here. We've basically made a nice 2-for-1 move already. So the probability of this pulling back is actually pretty high. Will it ever hit that institutional price target? It certainly can with time, but I'm going to wait and see what happens with this. That is one big pattern of impending volatility. So this could get volatile in the next few weeks here. Every time we've seen a diamond pattern, they usually predict that there's going to be some extreme of volatility coming very soon. And when they're on a daily chart, they're usually going to be gappy. So you'll see control bars like this just coming up on the daily chart. Big moves, right? So effectively, we could see this thing run either way. This may be a good idea for watching for a neutral position if you wanted to throw a condor or strangle at it, okay. My risk is going to say I'd like to trade the short-term or medium-term swing on this, and I'm going to wait for this. This is our go-to when it comes to finding if it's going to continue or not. When we see a wedge like this, we know the 60-40 rule is right there in perfect order. So we get a 60% chance of follow through on the bull move if it's going to be at the top of a bull channel, and we have a 40% chance of failure rate. Well, as time goes on, when you've already made multiple impulses in a trend, this is the last one. And lo and behold, if you wanted to draw this as a diamond, you certainly could. You can find 2 angulars here, and either it will break out and continue, or it will break down and revert to mean, which is down here. I will definitely put this on the watch list for a trade setup, and we will see which way it goes. But I'm going to stay on the side of neutral until this pattern breaks. So let this range break. We'll see where we go with this. I like this one. Probably has plenty of options liquidity too. I'll go look into it. All right, so that one's on the list. Moving on, we're going to go with Win. Nope, not that one. WYNN, I thought. Yeah. Typoed that. Wynn Resorts. So we're looking at Vegas again. They got a lot of resorts in Vegas, and well, they've got resorts all over the world, but running a liquidity zone, it's pretty known here. We did extend it into the next pivot. That is pretty plain as day. Easy trading stock here. I love the way this one is very predictable with liquidity zones, and we certainly have a handle on that. Looking at our current range, we can see there's a possibility of a move coming up here. Institutions have set their price target up at 138, and that is a serious bump up from 114 where they had it before. So let's drag that up to 138. Holy smokes. All right, let's look at the weekly. Well, hey, that would give us a 1.5 on this big old move here. We've made 1 for 1, 2 for 1 would put it up there, but we've already accumulated too long. And there's your previous high as well. It's a little bit below our previous high. I think I would be more inclined to wait and see what happens with the mid zone on this thing. I want to see it come through 116 before I trust a target of 138. I want to see it either do that or reject here and come back to a mean revision one more time. But this is actually looking pretty bullish. So let it break the angular would be the ideal, and that's all the way back here. And we can see that upon that announcement of an increase in price target, it went right to that angular resistance. Everybody knows where that is, not just the institutions. And looking here, this is a short-term trend. This is a little bit too big to be calling this a double bottom, but it can be a continuation pattern. First, it's a range, and we know the rules. All ranges break, and when they do, you have a trade. So let's let this range break before we take a trade. And it's certainly reaching right into liquidity zones, and there were a lot of limit orders selling this spike yesterday, and today we're looking to close a hammer, but not a great spot for a hammer. We'd like to see this do something from here, but it's going to wait. I think next week we could see this set up for a good swing trade. So I'll put it on the keep an eye on it list, but I'm not going to go and throw a trade idea out on this just yet. All right, last but not least on the list is Humana. I almost despise this stock because a lot of people get suckered into buying it. Ugh. And then they get sold. They've raised their price target. Get this, 610. I have yet to see an institutional price target on this thing until now. Maybe I haven't been paying attention long enough, but 610 is a little lofty from where it's at right now. That is for sure. Let's look a little bit further into this. Sure, we've got an angular. We've made a bearish 1 for 1. We're done here. We could revert to a mean, maybe see it hit about 490, but 600 bucks? Are you kidding me? 610? That is just gonzo. I mean, look left. We could see that this has definitely been a long-term prosperous company, of course. But we've broken a couple things here, except for a key support area, and that is the weekly 200 period, which is just barely hanging on today. Long term, I don't think I'd be bullish today, but I think coming down the line, we could see a reversal eventually. But until I see a confirmed reversal, I'm not messing with this thing because that is a nasty gap. That would have been a nice, easy bear setup. That's a perfect bearish 1 for 1 on that break. And everybody thought this was a giant bull flag. Of course, they bought it. And kablamo, dude. You know how those occur. So now we're looking for, can we get above resistance and close that gap? We certainly can, but we've got to wait for that to happen. So look at this as just a micro or on a daily 1 for 1 down and we've made a mean revision. So now we've established a new pivot, which is right here at about 445. And the clean zone would be break 445. We could see it revert back up here to 466 or thereabout. I'm going to take this pivot away, and I'm going to mark a liquidity zone because I know there will definitely be limit orders present in this guy here. Every time you see a wick, that's what you're seeing. A bunch of limit orders changing hands very rapidly. So this sets up a three bar range. So we have a supply zone here. We have a demand zone down here. And this will be the make it or break it. So let's just color that a different funky color. All right. So if this, then that. We want to see it break this range bar, of course, which it hasn't yet. There's a doji here, so it's indecision time. If this continues to break our key pivot area, which I will mark in white now, we could see a bullish move through this, and I would love to see it take profit here. And certainly if it makes an A to B outside of this zone and gives us a massive bullish signal somehow, we could see it close that gap pretty easily. But I wouldn't see it going much higher than that in the short and medium term. Super long term, years from now, okay, cool. Yeah, we can definitely see it hitting that $600.10 mark or $610 mark. Dude, that's going to take a lot longer than most people have time for, and that's one thing that is kind of true with retail versus institution. Is that institutions can wait forever, retail can't. And if you're looking to trade this thing, I'm going to wait for that range to break and give us a sign above this zone. I'm not touching this in this area yet. I may consider day trading a couple contracts on it or something, but I certainly wouldn't be chasing this around in this range. That is some pretty nasty business. And check out this diamond top right there on a 5-minute. So be nimble with this thing. It's certainly got some day trade setups and potentially some swing trade setups later on. But for now, I'm not messing with it. I'll wait until it goes and does what I'd like to see it do before I go and put a trade on that. One last look. I'll take a quick look at Tesla, and then we'll probably sign off for the day and call it a week. All you see is green on Tesla. I'm telling you, I got a lot of dope on this thing. And we're in right up to about the mean pivot of our 2-to-1 measured move. And we're likely to push on through up to that liquidity zone that we know about up here at 305. So probably going to close a hammer for the week here and set that up. There was certainly some sneaky stuff coming out. There was a leak on one of the AI bots that he's working on or whatever. Yeah, that made some bullishness. We knew exactly where the baseline of this channel was. We knew we were setting up for a short-term 1-for-1 here. That's all met, and it just about nailed our mean target here where that pivot is. And if we get bullish above that, we can certainly expect to move to the regression line here in the lower half division of that channel, and then possibly pick up a little more momentum and hit up to this liquidity zone. This line is off here. Why is that off? That's supposed to be a split. Sometimes Webull gets my drawings all messed up. That's why I'm converting to TradingView slowly. But at any rate, we've got all the channel information we need. This was a very complex diamond pattern here. That one's also skewed, but I'm going to delete it. Effectively, we are in the bull channel on the diamond pattern from back here, and we are looking strong. So Tesla is looking to break resistance here, and if it breaks this zone here, this 288 area, we could easily see it push to that 300, 305 area, and maybe even make an A to B through this known liquidity zone and run up in that channel. Regression line, of course, is always respected, and so is the division line. It's right here. So certainly make some shorter term trades on that, but overall, Tesla is just killing it. I love Tesla. Yeah, definitely keep an eye on that. That's going to be some known range. And I've got some trades on with it. I'm doing very well and happy with it, even though I had a very hectic week with a bunch of distractions that I couldn't trade with. But now I'm coming back in swinging. All right, guys. Well, that's going to do it for today's broadcast. Thanks for hanging out with me while we build a watch list. We've got two very good setups, one on Pan West and one on LVS. And we will see if we can set up some more dope on that. Of course, we will publish that. And of course, we will stick that onto our Twitter channel later on with Bullish Bears. And I keep things going with simultaneously casting into my Kick channel and building a following there, just to kind of broaden our exposure to the market here. We know there's a lot of people who are interested in trading, and we love to be the people to help teach price action analysis to people so they can make their own educated trades and plans and also develop their skills. We also teach a lot of complex option strategies as well as the simple strategies. We start from scratch and build you into a very knowledgeable trader. That's our whole purpose at Bullish Bears. So certainly stick around. Thank you for joining us. Be sure to like and subscribe and hit that bell. We're producing new videos all the time, and we are going to expand and be doing a lot more of that with a few more providers on that respect. And we're making some moves to advance and grow. And the more this community grows, the more support we get, of course, the more service we can give. And that's our whole intent, is to eventually be never having to charge a fee for our members and just bring everybody in eventually in the super long term. But in the meantime, every support that we get in between then and now is always greatly appreciated. And we eventually want to be your go-to for educating people on how to trade successfully and have that opportunity to take advantage of everything they can gain in knowledge of how to trade, and then produce some skills in being able to trade effectively and profitably in the end, inevitably. That's all going to be on your own merit. So like anybody would say, that's not investment advice. That's essentially just an opinion, and it's generated for more entertainment than anything. But understanding that you can learn from that is the whole point. And that's why we consider ourselves to be educators. We like to teach people how to trade rather than just throw a bunch of here you go, trade this, buy here, sell there. We don't do that. We're not shot callers. We are educators. Thanks again for joining us, and we'll see you next week.